Hey guys, welcome back to Bitcoin in Depth. I'm Keren Margolis for Sasco Digital Assets, and I'm here again with our CEO, Omar Sabek. And in this video, we are getting deeper into explaining Bitcoin's price volatility. Okay, so people are so hung up about volatility. It's always in the news. People are talking about dips and this and that and whatever and all-time highs. Is Bitcoin's volatility a flaw in the Bitcoin system?
I think it's actually a opportunity.
Okay, here we go.
I think it's actually one of the coolest things. It's one of the best things about Bitcoin because there's something for everyone in volatility, right? If you're a trader, you love it because you can play that volatility. You can play the volatility by, selling high, buying low.
Right.
If you're that kind of trader, you could play the market cycles if you understand the market cycles. You could zoom out and realize that the volatility is always on the upside. So you could be a long-term investor and not even have to worry about it.
Mm-hmm.
So
you're saying if you ignore the noise, if you're not so zoomed in and checking the price every day and you just kind of leave it alone for a number of years, it's not volatile.
Right. Well, it's volatile to the upside because it always
Right.
goes up over time.
Right.
And it goes up fast.
Yeah.
And it goes up hard.
Yeah.
And I don't know how you have an asset that goes up that fast and hard that also doesn't come down once in a while.
Right. It's a pendulum.
Right. And when it comes down, it doesn't go down to where it was 4 or 5 years ago. It goes down to a new support level. That's
Right.
where we are now.
So the trend line is always going up, even if you see these spikes and downturns.
Right, because it's being adopted, it's being held, so the supply is coming off the market, people are holding it, and more people are holding it over time. That creates less of a supply that can be sold. So these sort of dynamics, and they've been continuing since day one of Bitcoin.
But why does Bitcoin's price volatility not point to an inherent instability?
Why doesn't it point to an inherent instability?
Usually when we think of volatility, we think of something that's fundamentally not stable. But we've talked a lot about the Bitcoin fundamentals, and that seems to be really stable.
Right, I see. Okay, so you have when we're looking at the price, we're looking at a pair against the US dollar.
Right.
And if there's anything about the US dollar, it's the most stable thing there is.
Yeah.
Right? It loses value over time because it's being inflated, it's being debased, but it's still stable.
Mm-hmm.
But if you take Bitcoin and you compare it to other assets, right, not as volatile. Compared to gold, not as volatile.
What does that
mean? It's actually pretty volatile to gold because gold is so stable because that's another, big market. And that gets to the next point. The next point is that liquidity, right? So you have gold that's a $10 trillion asset.
Right.
There's a lot of money, in that market. US dollar is over 100 trillion. So there's a lot of stability in that market. Liquidity, the way I kind of like to explain what liquidity is for those that don't know is just like water, right? If you have, let's say a swimming pool,
Mm-hmm.
right? A splash in that swimming pool is not going to create as big a wave as a splash in a fish tank,
Mm-hmm.
right?
Right.
You drop a rock in a swimming pool, a rock in a fish tank, you're going to get a bigger wave in that fish tank because there's less water in it. And liquidity is no different. There's less money in the Bitcoin market. Let's be charitable to Bitcoin.
Okay.
And let's say it's a $1 trillion. It's not right now. It's like 600 billion. But let's say it was a $1 trillion market.
Okay.
Compared to $10 trillion for gold, or I think it's $100 trillion for U.S. dollars. You drop you put a big sell order or big buy orders into those three markets. The biggest move is going to be on Bitcoin because it's just a smaller market.
So when we're talking about Bitcoin being volatile compared to certain assets, but not being volatile compared to other assets, what would those assets be?
I think, so Bitcoin compared to other cryptocurrencies, probably not as volatile. But if we are going to just what are traditional kind of investments,
right,
I would say the most volatile traditional investment, or what should be the most volatile traditional investment, are stocks.
Why do you say what should be?
If we noticed what's been happening with the stock market since 2008, and particularly since March of 2020 when COVID, hit the world, we've seen that stocks have been, at all-time highs.
Yeah.
Why? The Federal Reserve is printing money in unprecedented amounts, and that money is being taken by investors, and they're buying stocks or corporations, and they're buying their own stocks in some cases. But
Right.
there's a lot of, and also people putting stocks into their 401k. So we see that the market is at an all-time high. You don't have that in Bitcoin per se. People will take the money and buy Bitcoin, but there's a lot more trading activity and leverage activity that happens on Bitcoin, which also makes it volatile. In the traditional world, that volatility is, you don't have real true price discovery because you have an incredible amount of, dollar basement printing. So you have really a system that's forcing these stock prices to continuously go up and up and up. Today we had a down day, and, the market is thinking, is the Federal Reserve going to take some action to backstop the market, right? So it becomes you do it once, you do it twice, you do it three times,
right,
and people are going to expect it a fourth and a fifth time. So
stocks are artificially unvolatile.
Stocks are artificially unvolatile. I would say stocks would be incredibly volatile if we didn't have the level of Federal Reserve printing that we have now.
So does that mean that Bitcoin is the volatility of Bitcoin is an expression of true markets, like it's raw capitalism at work?
Yeah, absolutely. It's there's no bailouts in Bitcoin. We saw on May 19th that the market just dropped precipitously from 64,000 down to a little bit under 30,000, and no one got bailed out. Only those traders that were highly leveraged took that risk. They got wrecked.
Okay.
Right? They're probably demoralized right now, which is why, the market is doing what it's doing. But there's no federal bailouts. No one's looking at the crypto markets and saying, we should, backstop those, because it's designed to be open, unmanipulatable, right? Which you can't really say for stocks. Stock market, right? If I'm shorting a stock and the price of that stock starts dropping, or if there's some market event that, creates this downward pressure, it could trip a circuit breaker. Right? Is that not a form of manipulation in the markets? Right. It could trip a circuit breaker. The markets are also open during certain hours. So if there's an action that you want to take in a market and it happens to be closed at that point in time, is that considered gatekeeping to some? Absolutely. Yeah. Right? So there's always rules around the traditional markets that don't apply in the crypto markets. So the crypto markets really, like you said, represent a completely open and real free capitalist system.
So when we were speaking yesterday, or a couple days ago, we were talking about the fact that not only is the volatility that we see in Bitcoin not really a bad thing and not a flaw in the system, but you told me that if there were to be zero volatility or no volatility, that would be a bad thing. Why is that?
There would only be two scenarios. A, it's a failure and no one wants it, so there's no volatility because it doesn't even.
There's just no movement.
It's just up, right? There's no value behind it. There's no transactions. Nothing's happening. No volatility. Price is at $1, right? Or it's just widely adopted and there's no more future opportunity for it because it just we're talking peak adoption 20 years from now, 10, whatever your number is, right? Yeah. And it's just fully adopted. So the global narrative around a story of Bitcoin no longer, it doesn't represent a growth opportunity because it already has grown to its maximum total addressable market, right? Is one way of putting it, total addressable market, but in effect, fully adopted. So then you would see no volatility. But in between those two, scenarios, here we are. And it's on its, growth. It's doing what it's doing, slowly growing, slowly becoming adopted, slowly being looked at by institutions and governments as a way as a tool to solve some problems, insurance companies, right? So it's doing what it does, and that over time will reduce the volatility because it gets more and more adopted, more and more liquidity. So if for those people that look at it as a terrible store of value because it's volatile and they're only looking at it on like a 1 or 2 month time frame, just wait a couple of years until the price is way higher than it is, and it has a much larger market cap, and you'll have a less volatile asset. It'll probably so right now it went down 50% from the all-time high. It might go down a little lower. It might not. I would expect in a few years that would become 40 and then 30, then 20. Till eventually, that volatility just totally kind of balances out into, again, being in a fully adopted kind of, world.
So as long as there is this volatility, would you say that this presents an investment opportunity? Not saying whether people should invest or not, but as far as buying into something that is projected to appreciate over time, like with any asset, is this period of time when it's not the most widely adopted, is this the time to buy in if someone were going to do that?
Absolutely, and the sooner the better. But it really requires, education. I think anyone who is interested in using Bitcoin as a long-term asset should understand the market cycles, should understand the dynamics, really everything that we're talking about here in these videos. Because I think that will give you a view of how the space works, and then you can set your own kind of time projections, and you can set your own kind of goals, and you can try to figure out what Bitcoin's going to do in the next year, 2 years, 3 years, 4 years, and that understanding helps you plan. And I think that's really where the investment should be.
Okay, last question. So we've talked about volatility being a feature of new technology adoption and that it's happened over and over. But the last time that in a lot of people's living memory, we remember this, was in the late 90s, early 2000s with the early adoption of the internet, the early widespread adoption of the internet. So how does this moment in Bitcoin history compare to that moment in internet history?
Oh, great question. That's excellent.
Thank you.
There's a lot of parallels, right? We had the early internet I would consider 1995 to 1999, this pre-dot-com bust.
Right.
And what we saw was this kind of Cambrian explosion of internet companies that drove in a lot of capital, and that capital drove a lot of valuation. And we saw companies that are very successful today, Google, Amazon, they started back then. But we saw a bust in 1999. Mm-hmm. And why did it bust? It was because we had a ton of different .coms like Lycos and Pets.com that talked a big game, but there was no underlying infrastructure there. There was no broadband that was widely deployed. There was no underlying infrastructure there to bring the users to those websites to drive, the profitability numbers that they were claiming that they were going to be hitting. Mm-hmm. Also, during that same time, you had economists like Paul Krugman in the New York Times, right, on the editorial board, saying that the internet was not going to have a meaningful impact on anything. It's just, no one has anything to talk about, and it's going to go the way of the fax machine.
Yeah.
Right? So you had the elite, just like you do today.
Literally like we do today.
Just like you do today. It's literally the same people.
It is.
Bashing Bitcoin, right? So you have that.
Why do they do that? Why are people so alarmist about this?
I don't know.
Okay.
I think it's a natural reaction. They're sitting in positions of power, and I think it's a natural reaction to anything they see. Why are they against blogs? Why are they against Substack? They're against really anything that decentralizes their power.
Yeah.
And it's
I love that for us.
And I think I don't think there's a conspiracy. I think it's just a natural reaction.
Right. That's just human beings resistant to change.
Yeah, and they work at these publications. But there's also the decentralization of all media that's happening. So people are leaving those sources, and they're looking at alternative sources. They're watching this video right now. So
are we looking at Bitcoin as being a kind of asset bubble, or is that separate? Is that different from the way that the .com bubbled out?
Right. So then what happened? So we saw a crash in that market, right? All the .coms kind of busted, Amazon included. And what resulted after that was only the strong survived, right? So, those are the names that we see today.
So can we compare that to the crypto space in general? The way that Bitcoin has sort of emerged as a clear OG front runner?
Yeah. And it was way more volatile. Amazon, Google were stocks that were incredibly volatile back then. Facebook was incredibly volatile in the early days. Same thing with Twitter, right? But now some of these names have become the blue chips, the bluest chips of the blue chips. Mm-hmm. So that volatility that you had 20 years ago is now, a very stable, widely adopted equity. And, the other parallel is we couldn't, very few people were able to kind of foresee 20 years into the future back during the .com bubble.
Well, how could we? I mean, who could have predicted how widespread this would be?
Widespread and just incredibly meaningful to pretty much every life, right? And the amount of connection and the amount of economic activity that the internet has generated, I mean, we're living in a different world, and it's, I don't see it being any different than, a world 20 years from now with cryptocurrencies and with Bitcoin particularly, what that world would look at. We can't even begin to imagine the types of, financial interactions that we're going to be seeing between people on the ground, in society, without any kind of restrictions to or barriers to them to be able to transact wealth with each other, and computers will be doing it with people, and it's going to be a really exciting world.
So for people who are worried about Bitcoin price volatility, what's your message to them?
Zoom out. It's very simple. Just zoom
Relax.
out. Yeah, zoom out. It's a long-term performing asset.
And by long-term, we mean 3 to 5 years kind of thing?
At the max.
Yeah.
Or several months.
Yeah.
It really depends on what the market is doing and where you're, at what point in, the cycles you're looking at it. The cycles are even, the broad view. So we just hit a 65,000, all-time high in May. We're down 50% on that. There's a lot of stability at this level. There's a lot of support at this level. I kind of see this market as kind of like a spring that's coiling.
Yeah.
The sellers need to be exhausted. The buyers are very likely, they're institutions at this stage, they're very likely to come back at the end of the summer and start buying again.
Yeah.
And there's not going to be as much Bitcoin on the exchanges when they come in to buy. That creates a supply squeeze, a supply crunch, and so that's what I think is going to happen over the next couple of months, but you never know. And but if there's anything that has been true for Bitcoin over time, it's that it goes up.
Right.
Number go up technology is what it's called, because it has the economic incentives there. It has the network effect to drive that adoption, drive that demand, and drive that capital to come into it over time.
And that is the point.
That's it.
Okay,
Yeah.
that's it. Yeah, awesome. This was such a good video. If you haven't seen our bite-sized video, go ahead and check that out. We hope that you enjoyed this. If you did, please hit the like button so that we know. Leave us a comment down below telling us what you thought. If you have any questions, weigh in on this. We would love to hear from you. Subscribe to our channel, please, if you haven't already. Tell your friends about us, since our content is so fire. And hit the notification bell so that you always get notified when we drop new videos. I'm Keren Margolis. This is our CEO, Omar Sabek, for Sasco Digital Assets, and we'll see you next time.